Hey everyone, today we're going to pull back the curtain on how to figure out what a company is really worth. We're going way beyond the headline numbers to get into the nuts and bolts of what makes a business truly valuable, especially in the world of manufacturing.
So let's just dive right in with the question that sounds super simple, but the answer is anything but. Is a profitable company always a valuable one? I mean, it seems obvious, right? More profit must equal more value. But as we're about to find out, that's not the whole story, not by a long shot.
You see, the first thing we've got to wrap our heads around is that profit, all by itself, can kind of be a mirage. It tells you one piece of the story, sure, but it often leaves out the most important parts. And that's the absolute key right there. A profit statement tells you what a company made last quarter, but it doesn't tell you how they did it. Was it just a lucky one-time sale? Did they have to gut their R&D budget to make the numbers look good? And the million-dollar question, can they do it again next year? To answer that, we need a much better tool.
And that better tool is exactly what we're going to dig into. There's a much more, let's say, scientific way to look at a company's health, one that takes you deep inside the engine room of the business. It's called value analysis. And what is it? Well, it's a systematic way of improving the real worth of a product or service by looking at what it does versus what it costs. It's all about finding that perfect balance between performance and price. And value analysis really rests on three main pillars. First, you've got optimizing cost. Now, this isn't just about slashing budgets. It's about finding that perfect sweet spot between cost, quality, and performance. Second, maximizing assets. Are you getting every last drop of value out of your factories, your tech, your people? And third, you're constantly evaluating performance, always on the hunt for those hidden opportunities to get better. And this example just perfectly illustrates the point. A 2024 study looked at drug companies during a recession. And what did they find? That having cash in the bank was a much better sign of long-term value than their immediate profits were. And why is that? Simple. Cash gives you options. It gives you resilience when things get rocky. Profit on its own just can't do that.
So, how do the pros actually put this into practice? Well, this isn't just some vague philosophy, it's a hands-on approach with a really powerful set of tools. So let's go ahead and open up the Analyst Toolkit and see what's inside.
Okay, our first tool is one of my favorites. You can think of it like a financial microscope. It lets you take a single, common number that you see all the time and zoom way in to see all the different little parts that actually make it work. It's a classic for a reason.
It's called DuPont's analysis, and it breaks down a big metric called return on equity, or ROE. Now, instead of just seeing that one number, it tells you three different stories at the same time. First, profitability. How much money are you actually making on each thing you sell? Second, asset efficiency. How good are you at using your machines and your inventory to make those sales? And third, financial leverage. How much are you depending on debt to keep the lights on? You could have two companies with the exact same ROE, but one is super efficient and the other is just drowning in risky debt. This is why you have to look deeper.
And DuPont analysis? That's just the start. The toolkit is huge. You've got things like discounted cash flow, or DCF, which helps you guess what a company might be worth down the road, not just today. There's earned value analysis, which is a lifesaver for keeping massive projects on track. And you even have things like boundary value analysis, which actually comes from the software world and helps guarantee quality. Every tool has a very specific job. Let's just quickly look at one more. Earned value analysis. Just think of this one as a real-time EKG for a big project. It's brilliant, really. It pulls together a project's budget, its timeline, and its actual progress into one single dashboard. This lets managers spot trouble long before it becomes a disaster. And these tools, they have a massive real-world impact. Take that software testing one, boundary value analysis. A study from 2024 found it had a 96% success rate in finding bugs on e-commerce sites. How? By testing the weird edge cases, like the minimum or maximum values you can type into a box. That's value analysis in action, preventing errors and making sure customers have a good experience. But here's what I think is the most important part of this whole thing. These tools aren't just for number crunchers sitting in a back office. This is where analysis turns into action. This is where it becomes a core part of a company's actual strategy for the future. It's a fundamental shift in how you think. You know, the old way was totally obsessed with short-term profits, hitting those quarterly numbers no matter what. Value analysis makes you change your perspective. The focus shifts to long-term health, and the goal becomes building a competitive advantage that can actually last for years, not just a few months. And you see this being used everywhere. Companies use it to figure out their strategy against global competitors, The aircraft industry uses it to make those incredibly tough decisions, balancing quality, safety, and cost. It can even help a factory figure out the absolute best time to replace a big piece of equipment. And now it's even expanding to include social and environmental factors, creating a truly complete picture of what value means.
So, we've gone through the theory, the tools, the strategy. What's the one big idea that I really want you to walk away with?
It's this. Value analysis isn't just a calculation. It's a lens. It's a whole new way of seeing that lets you look right past the flashy, surface-level numbers and understand a company's real health, its strategic direction, and its genuine potential for the future.
And that kind of leaves us with a final question for you to think about. The next time you look at a brand you love, or maybe a company you've invested in, ask yourself, beyond whatever profit they're making, what is its true value?